Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we'll take a look at will be the Australian US dollar. Aussie US dollar, you can see pretty good down move there. We talked about that. On the other hand, you're coming up on support. I would see support, looks like right around 71 and a quarter, maybe a little higher than that, 71.35. So I would definitely look for that level to hold. Between now and then, I would probably look for a test of that level, meaning you get some kind of a counter trend move against this sharp downtrend. Pretty good momentum down there. But should you get a counter trend bounce from there, at some point I would look to sell that in anticipation of a test of this level right in here. There, all bets are off, and the markets, they're creatures of habit. We'll look at this chart in the end, and we'll talk about it. It's essentially a flocking chart, and you can see how they tend to all move together. The Aussie and white, Aussie leading on the downside. We'll see if leadership shifts there and if everything shifts back higher. But for now, we see a little bit more downside in the Aussie. Any rallies there, short term, intermediate term, probably need to be sold. Next market, dollar Swiss. Dollar Swiss, you can see sitting right under resistance. You had that clear pattern of lower highs, lower lows. Long term, I think it's set up very nicely here. We talk about that all the time. I think you have a beautiful double bottom in here. However, I think you still have some tough sledding ahead. You're sitting at resistance right now. Well, may or may not repel it, but certainly the next level up, you got pretty good resistance there, 98.75. So I don't think you're out of the woods yet. It was great to see that U.S. retail sales report, good number, good growth. On the other hand, a lot of stocks didn't react well to that. In fact, the U.S. stock market ended up lower. So I think that's probably going to be an overhang here. But long term, we still love dollar Swiss buying dips there. Short term, you got perhaps a tough slog ahead. On the other hand, if you can motor through this resistance, you clear 99 one more time, I think that's it. That market's gone on the upside. And here again is that here's the upside. Look at all the upside in that market. There's your dollar Swiss, plenty of room up above. Next market, dollar index. There's your dollar index. You saw you reached pretty good resistance there. Pretty clear pattern also there. Lower lows, lower highs. So we would anticipate probably a decent swing trade short off of that 95 level, a little bit below 95. So we'd be taking a look at that. So keep your eye on that. Perhaps the market wants to put in a higher low right in here. We'll have to watch that. Market did find support on long-term structure there at two-third retracement. That's always a big level for us. So keep an eye on that. Yeah, what can you say? Yeah, that pattern is still ruling that overall. Well, you see the pink box. You're still in control there, so still waiting for a potential higher low there. Here's the euro. Again, sitting right on support. We think overall, though, you got to sell rallies short term, intermediate term. We think it's going to test 111, so there's a little bit of room down there on the downside. We'll have to watch that, though. But in order to get to there, you got to get it close below 113 even. So it's sitting on support right now. We were calling for swing trades higher here. I got to say it again. Hey, if 113 is going to hold here, and we'll know in a hurry too. I mean, you'll probably know going into today already. But if that level holds, expect another run higher there. Personally, I'd love to see a higher high here, just to flush out the last of the tougher shorts and get this thing swinging lower overall. Would love to see a test in 117 even again, but that could be wishful thinking. 113 even the level to watch right now. If you can chip through there, I think you got a good shot at going to 111. It's a big if though, so let's see how they come out of the gate this afternoon and tomorrow. Gold market. Gold, from my perspective, actually looks like it's setting up for another leg higher here. Tough market. It's similar to euro, similar to all these markets. It's sitting right on support. Likewise, the dollar just sitting right at resistance. So you got to see what's going to happen. Definitely a pivotal area on the chart. Again, great to see good U.S. economic data. I think that's the tip of the iceberg. You're going to continue to see that. So overall, you'll have tough slog the closer you get to June as far as upside in the euro, upside in the gold. On the other hand, you're still a ways away from that. You still have half a month in May, so the market will probably be data driven in favor of the dollar. But there's plenty of room in between when there's no numbers, and momentum favors the upside here. So big level to watch right there, 1262. We'll have to keep an eye on it. Here you can see gold in yellow. You have all these markets grouped together. Gold holding up pretty darn good, right? Essentially stock markets leading them, still leading them on the upside, but you did have pretty good weakness Friday. We'll have to see. So there you can see them, they're all lined out there. We'll have to see what happens. Is leadership going to shift and the Aussie swings back strong? Likewise the euro. Definitely have to watch it. But yeah, pivotal area on the chart. Can't rule out another rally higher in the gold, but for me it just sets everything up for that major top. And you got a big seasonal down in the euro, so major top, major bottom for the dollar, major top for the euro, foreign currencies, potentially gold heading into June, but you're not there yet. Last market, U.S. interest rates, and here's kind of an interesting chart, because even with that really good U.S. retail sales number, Treasury bonds went up. Generally, Treasury bonds go up when the markets or when the economy is soft overall. So, not sure what's going on there. This is your older investor class here, and they just refuse to sell their Treasuries. They're hanging on to the Treasuries because they're guaranteed that yield, and they love U.S. Treasuries. They won't come out of there. They don't want to go in the stock market. They don't seem to want to go into any other investment. They keep hanging on to their Treasuries. That's that older demographic in the U.S., and there's just no way they're coming out of there. They're probably the most scared investor class you've ever talked to in the history of the world. It's strange because the U.S. stock market's been so strong, U.S. dollar's been so strong, but you can't tell that to folk that are 60, 70 and up in the U.S. They're hanging on to those treasuries for dear life. So that's just the way it is. But you can see you got pretty good resistance right there. The dollar's not going to revive itself again. The dollar's not going to get it going on the upside until you can break the back of this rally in the treasuries, and that's going to spell higher rates, which is going to be healthy overall for the U.S. economy. On the other hand, if you're holding long treasuries, you don't want to see higher rates, and that's really the story here. Thank you so much. My name's Jay Norris. I teach trading at Trading University, and we'll see you guys again next week. Thank you.